Hello, everyone. Welcome to our webinar on how to make sustainability reporting a growth driver. My name is Siu Yin. I'm your host for today. Next slide, please. Before we dive into our webinar, please allow me to go through some housekeeping items. All lines will be muted during the webinar. Please submit your question in the Q&A chat box, which is at the bottom of your screen. The webinar will be recorded. We'll be sharing the recording and slides with all attendees after the webinar. And at the end of the webinar, before you leave, please take 1 minute to complete our feedback survey. Next slide, please. In today's webinar, we'll be covering a few topics. We will be focusing on trends influencing Australia, New Zealand, and ASEAN sustainability reporting landscape in 2025. We will learn about the significance of GRI standards in sustainability reporting, and we will share insights on how we can build trust through sustainability reporting assurance, followed by Q&A at the end of the webinar. Next, please. Our speakers for today is Luis Filardi, Head of Sustainability for ANZ at BSI, and Dr. Allinnettes Adigue, Head of ASEAN Regional Hub for Global Reporting Initiative, GRI. Without further ado, I'll hand over to our first speakers, Luis.
Thank you very much, Siwin. You hear me well?
Yes.
Thank you very much, ladies and gentlemen. Thank you for your time today to discuss sustainability and the trends in ASEAN, APAC, and from a, I could say, a global scale too. What's influencing our reporting requirements and what is coming ahead of us. So without further ado, I may ask Siwin to please move to the next slide. So we're going to cover 4 main topics in this presentation today. Who's BSI, the reporting landscape, which ingredients should we consider for growth in terms of sustainability reporting, and sharing a couple of case studies. Next slide, please. Well, who BSI is, we stand for British Standards Institution, and we are an impact organization, and we have our values in terms of driving positive change for a better world. And we do that through the delivery of our services throughout more than 190 countries, and we also perform the governance of those services that we provide are governed by 4 main areas, one of which is knowledge solutions, which is responsible for designing standards that we have been developing over the years. We've reached about 60,000 standards as of now. The assurance section, which provides certification and independent assessment of claims, reports, and certification of systems. Regulatory services, which looks into products and solutions from a regulatory perspective, and training. We have a wealth of a portfolio of training, which is trying to foster everything that we learn from our services, and also from what we have invested in our people, and offer those educational aspects to all organizations across the world. Thank you. Next slide, please. In terms of numbers, we haven't shareholders. We were founded in 1900s. And by not having shareholders, we have an independent aspect and angle on delivering our services, which gives us freedom to be impartial in everything that we do. And by doing that, we've accumulated about 84,000 clients that we deliver in more than 190 countries over the years. And we also have the privilege of having designed about 60,000 standards. A couple of them we're going to talk about today. And in terms of sustainability and reporting, we have verified more than 1,000 reports across the years, and just over 2,000 reports specific on greenhouse gases emissions, just to share some numbers with you today. Next slide, please. The reporting landscape as we stand today. Next slide. I'd like to discuss with you from a let's say, historic perspective on the ethical investment perspective. In the early stage in the 1970s, ethical investment was one of the main topics that were addressed after the establishment, or let's say the divulgation of sustainable development as a phrase by Go Brundtland in Montreal, and that became the norm since then. And we've been having the privilege of working throughout those times and in the 90s and until today. So it evolved into corporate social responsibility, and then ESG more recently in the 2015 timeline. That was when, I guess, one of the milestones of that process was when TCFD was generated, that invited the finance sector to look into those risks associated with transition towards a low carbon economy and physical risks that were impacting their assets. And ESG is still the norm nowadays to analyze investment risks. And from now on, we will see there are some indications that we've been working on some standardization, which is a collectiveness of society's needs. And we will be looking into biodiversity and quantification of biodiversity, co-benefits, circularity, cost of degradation, and so forth. Next slide, please. In terms of the main disclosure standards, there's numerous standards out there, but what we have been experiencing is that they are kind of segmented in two main areas. The two ones on the left side of the slide, GRI and the ESRS, which is the European Reporting Directive. They are more into a wider stakeholder embracement, if I may. And then on the three ones after that, which is they are more financial, they have the more financial perspective. So one of the standards that I would highlight among the specific ones, which are mostly stock exchange mandated to the listed companies, is sustainability linked to loans, for instance. SLLs are an instrument used by banks and financial institutions to rate the capital intense projects that they're going to invest on, and they require the companies that are deploying those projects to disclose their sustainability risks. But even though we have all those standards and guidelines, GRI, Dr. Annette is going to talk about that specific GRI. So you're going to hear it straight from the source today. And ESRS, ISSB, AASB in Australia, TCFD, and the names are out there listed below. They have almost the same principles. They might be named with different wordings, but they have the same principles, such as transparency, completeness, relevance, integrity, accuracy, and conservativeness. So they are mostly governed and designed around those principles. Next slide, please. Specific examples of sustainability reporting mandates. We have Malaysia with the NSRF, which is somewhat ISSB aligned. So excuse me the wording again, but back into the previous slide that I referred to is the International Sustainability Board from IFRS, which is another acronym, and excuse me about that one too. But in essence, it's a guideline for investment decision-making process and analysis of associated financial risks. And the same in Singapore. They had been scrutinized about their requirements in terms of GRI, which is the Global Reporting Initiative, SASB, Sustainability Assurance Standards Board, TCFD, Task Force for Climate Financial Disclosures. So Singapore has a very good requirement in terms of standardization that are required for companies, listed companies, to be compliant against. The same would apply in Thailand, and in Philippines. It will also be listed for a requirement for listed companies. In New Zealand as well, they have specific criteria, for instance, using standards that are known from the finance aspect and also from the greenhouse gases aspect, ISO standards. In Australia, most recently, Group 1 companies must disclose their emissions in alignment with the ASB, which is Australian Assurance Standards Board, which is ISB based. But it's a clear indication that Group 1 companies that within a certain threshold must report their emissions starting 2025. Next slide, please. Next slide, please. How can we grow with sustainability reporting? It's a compulsory element to start with. Companies are mandated to report, or they have a strategy towards that independently. We have seen over the years that companies must define the intended use of their reporting. It can be compliance. Companies must report because of obligations from regimes that exist in their countries, or could be access to capital. Would they be looking into a decarbonization project that they would be investing, or even expanding their operations in oil and gas, in energy, in manufacturing? How would they access to capital? Is that my intended use? Comparative advantage. Some organizations may look into reporting because they would give an advantage in comparison to their competitors, so that they can be ahead of new market share. Rebranding, which enhancing reputation, or a specific project execution. These are all elements that are lined up for us to define the intended use. That's the main step for us to take before reporting on sustainability. Next slide, please. And that leads to specifics. When you define your intended use, then you look into the main principle, main objective, I'd say, which is gain stakeholders' trust, independently of who your stakeholders are. Mostly depending on the intended use, you'll be more focused on the community that your operation runs, or surrounds the surrounding of your operation. It could lead into the value chain, or which is considering downstream your clients, for instance. So depending on your intended use, independently of your intended use, you would have the need to enhance the stakeholders' trust. And that would be done through the compliance regimes that you are already doing from an ethical perspective and compliance perspective, everything that's being required by law. Or you could also look into improving all your activities, the data and communication and control from a systemic perspective. And that leads to why not considering ISO standards, for instance. ISO 14001, there are more than 500,000 organizations across the world that are certified on that scheme. That's an ISO data. ISO 9000, for instance, there's more than 1 million organizations that are certified on that. So that tells us that there is benefit of being looking into systems, because systems are essential for your next step, which would be to distill a little bit and become more sophisticated on the reporting regimes that you look into. For instance, from a net zero perspective, there are lots of claims about net zero. About 70% of the main stock exchange organizations, they are claiming net zero. But how to govern net zero? How are you going to deliver those net zero milestones? There are tools such as the net zero pathways, and then we becoming more specific even on carbon credits intention, such as the PACM, which is the Paris Agreement credit mechanism preparedness, and so forth. I won't go through all the details, but that leads to a more mature perspective in terms of organizational aspects, so that you would be prepared to look into trends as we see and have briefly spoken before. co-benefits quantification. This is a very big challenge, and one of our clients was requiring to embed the benefits of the society on the community surroundings of their new project. Another client was wanting to have the measurement of water impact, or what's the water impact on my new project? How am I going to quantify that? And another client asked us to certify them on AI, which is one of the big four organizations that we have certified them on ISO 42001, which is, and they became the first big four company certified from a global perspective by BSI on the ethical conduction of AI in their operations. Next slide, please. A couple of case studies for us. Next slide, please. So the first case study, it's ourselves. We are reporting against TCFD and also considering the ISO net zero guidelines and also carbon neutrality in our regimes. We not just talk the walk, but walk the talk as well. So we have taken some steps internally to deploy our net zero commitments. So the first, as you can see, is alignment, public communication externally and externally. The quality of the data, we had to ensure that there is a software, there's a management system that would enhance the quality of the data, QA, QC, quality assurance, quality control, and that is internal auditing already conducted on that specific item. Engagement, taking 3 steps towards engagement. We have a team, engagement team that looks into why are we aligning ourselves in relation to net zero. What does it mean for us, and how can we help? How can I help every one of us? Ownership and transformation, the carbon budget. Every executive has their carbon budget, and it's linked to their performance. So that things happen from a top-down perspective too. Global consistency, we have systems and processes led by individuals in each region. And future focus, we have to validate everything that we do, so we contract a third party as well to look into our systems so that we can make sure that we ourselves are also future-proof. Next slide, please. Another example of an organization that we have worked with, it's a public case. It's downloaded on the source link below that's going to be shared with you later on. General Motors, I guess one of the main elements that they have taken as an example, a good practice when they embedded themselves and aligned themselves within the ISO net zero guidelines, which we, by the way, designed together with ISO, launched at COP27. Is that they have anticipated revenue from the sales of new electric cars. So there was a program of electric cars within the organization. However, by integrating that net zero guidelines, which requires that board and executives remuneration is linked to certain milestones, it had enabled the knowledge of net zero in a more wider perspective, as not only confined in the sustainability space, so that other areas also emerged into it and had to contribute to the achievement of certain milestones. So that General Motors anticipated the launch of new products, and that enabled them to gain new markets. So that's one of the benefits, and there are other ones that we're happy to discuss anytime in the future. Thank you. Next slide. So in summary, we have numerous case studies I'll be happy to share. However, I'd like to summarize as of now through the outcome of what sustainability assurance can bring to you as an organization. I guess the main thing is reliability. That's if we look into that pyramid, if we only go compliant with regulation, we have a certain let's say a comfort zone in terms of making sure that our organizations are up to standard and attending the law. If we go reporting externally, it's another step, exposure. And if we then assure by a third party there, you start to gain, let's say, more of a trust perspective from numerous other stakeholders that can lead to growth. And that, and one of the takeaways I would say from this presentation now is that governance is key in this process. And how can we govern ourselves towards those compliance mechanisms is to embed systems, and we've been doing that over the years, and we'll be happy to discuss that in more details. With that, I'll transfer to Dr. Allinette from GRI. Thank you very much.
Thank you very much, Luis. Good afternoon to everyone. Can you hear me clearly?
Yes, Dr. Ali, all good.
Second here.
Okay, great. I just wanted to test that out. Okay, so first of all, thank you very much to BSI for this invitation. BSI happens to be GRI certified training partner. So today I am asked to talk about the sustainability reporting with GRI standards, and why do you have to report on GRI standards, and so I will not go into details on the how, because that you can, if you really want to know about the details of using GRI standards, then you can enroll in BSI's trainings for sustainability reporting. Next, please. Okay, so before I start with this slide, can I just have, like, if you have heard, because I just want to have an idea how many, we have like 100 plus people in the audience. Unfortunately, I can see all of you, but for those, I just want to know how many of you have heard or know about GRI. So if you can just do some thumbs up or whatever emoji you can click on, just so I have an idea how many from our audience have heard of GRI. Unfortunately, I don't know if anyone is clicking some emoji, because I cannot see anything. Or if you can just, put in the chat box, thumbs up if you've heard of GRI, or just say yes or no. So just for me to have an idea how many of you knows about GRI, just also for some audience participation. Anyway, proceed. So just to start with, who are we? Who is GRI as an organization? So GRI is a nonprofit organization. It's a global nonprofit organization. We were created in 1997, and at that time, the companies are only required to submit financial report. But also around that time, in the 70s and the 80s, there were so many reports of corporate misbehavior, whether it's on the environment side or human rights violation or labor law violation. So our creators at the time deemed that it would be, our creators were UN UNEP, UNEP, and CERES, which is a global think tank organization based in the US. So they thought that, maybe it's high time that we get companies to report on their non-financial performance, because a financial report doesn't really show the stakeholders, how they're impacting the economy, environment, and society. For all we know, then they may have good financial numbers, but at the expense of who and what. So that's the creation of GRI. So how do we do that? We help businesses and organizations understand and communicate their sustainability impacts by reporting on using the GRI standards. So GRI standards is the most widely adopted sustainability reporting framework. So the standards in itself, anyone can download it for free on our website. It's freely available. It's only like, if you want to dive, and you can do self-study if you're that kind of learner. But if you want to do some deep dive on the GRI standard, then you can either enroll at the GRI Academy or go to our CTPs like BSI. And we are a nonprofit organization. So anything that we earn from our revenue or revenue activities, it's funneled back to the creation of the GRI standards, and to in some regions we provide some free capacity building programs. So everything is funneled back to the mission of GRI. Next. Okay, so what are our strategic focus areas? So there are four. So one, of course, the core of our focus area is to create and maintain a world-class sustainability disclosure standards. And since we have put out the disclosure standards out there, we push for the global adoption of the GRI standards. And of course, attached to that is just not enough that we get companies to start reporting on GRI, but we also improve the quality of reporting. And it is not, and the most important thing is sustainability reporting is all about transparency and accountability. So we support and encourage the public access to sustainability disclosures. So meaning if a company, went through the trouble of publishing a sustainability report, and of course, we encourage companies to make the report public. Next. Okay. So GRI has been around for almost 30 years now. So it just makes sense that we are the most widely used sustainability reporting standards out there. Actually, GRI is the only standard setting body that looks at impact reporting, meaning your impact of an organization to the economy, environment, and society. And you can see on your screen what are our impact and numbers. I will not go through everything, but I'll just highlight the important ones. So of course, the most important thing is 90% of the largest companies in the world report using GRI standards. I mean, major companies. And then 77% of the world's largest 250 companies report with GRI. Around 128 countries in the world have national or jurisdictional policies that reference the GRI standards. Some countries even go to the extent of requiring the use of GRI standards. One country that comes into mind is Taiwan. Taiwan is mandated in GRI is mandated in Taiwan. And right now, GRI is translated to at least 13 languages. So that just shows the breadth and extent of the usage of GRI. It expands also to non-English speaking language. And of course, to help us promote the use of GRI standards and to train organizations to use the GRI standards, we have more than 100 training partners in over 50 countries that offer our training program. As I said, that includes BSI. In the recent years, we've seen a growth of software companies that provide digital solutions for companies to help them in their sustainability reporting. So now we have around more than 100 licensed software and tools partners. Next. Okay. So when I say that we provide the world's let me just go back. Yeah. So when we say that we create and maintain world-class sustainability disclosure standards, what we mean by that is we aim to represent the global best practice for reporting on sustainability performance. So GRI has, I will show how the GRI standards look like, but every time we come up with either a new topic standard or a sector standards, we create this multi-stakeholder committee. So you can see your screen. We may ensure that all stakeholders are represented. So not one voice can drown out others' voices. So we're not just representing the businesses, but we make sure that civil society, investment institutions, labor organizations, and mediating institutions are also represented. Depending also on the standards, sometimes we also get government organizations to be part of our technical committee. So we scour the world for the best practice in related to those specific topic or sector standards, so that we can to ensure that there's comparability and quality of information. Next. So related to that, that's why, like for example, for the sector standards, I think we have released around 4 at the moment. We're working on 2 currently, and we're aiming to release around 40 plus. And there are stakeholders who ask, like, we need this. We're from this sector. When are you going to release it? So we cannot come up with all the standards all at the same time, because GRI is a small organization. I think we're just 100 globally. And each standard, as I said, is carefully thought out, it's carefully researched. We also do a broad consultation. And it takes us, because we ensure the credibility of the process. So it takes us around 2 years, to finish and to finish and launch every standard that we create. So GRI, as I said, is a pioneer in sustainability reporting. This this slide might have come late. So what is sustainability reporting? Sustainability reporting is an organization's practice of reporting publicly on its economic, environmental, and/or social impacts. And therefore, reporting publicly their contributions, whether or positive or negative, towards the goal of sustainable development. So what is the benefit of doing a sustainability report? This is not just a tool to report, but this is also a tool in planning. It assists in goal setting, measuring your performance, and managing change. So you're just not bean counting. You're not just taking note of what you are doing, the activities that you're doing, but sustainability reporting using the GRI standards helps you to identify what are your most significant impacts. So it makes abstract issues more tangible and concrete, and it helps companies develop their sustainability related strategies, so that they can continuously improve their activities. And as I mentioned earlier, it is stakeholder focused. So it's not just catering to the shareholders, but it also looks at what are the interests of your employees, your suppliers, the communities where you're operating, and so on and so forth. Anyone who has a stake to your company. So the practice of disclosing sustainability information inspires accountability. It helps you identify and manage your risk, and also enables organizations to seize new opportunities. And this may sound like a cliche, but you hear it often when we talk about sustainability reporting. You can only improve what you measure. Next. Okay, so this is how, for those who have no idea yet of what GRI standards is. So this is the GRI is modular in nature. So you can see on your screen, it's divided into three modules: the universal standards, the sector standards, and the topic standards. So the universal standards is basically the foundation of using the GRI standards. So it applies to all 3 universal standards to your reporting, meaning it's sort of like the introduction or the guide, how to use the sector standards and the topic standards. So GRI 1 talks about the requirements and principles for using the GRI standards. GRI 2 it's about disclosures about the reporting organization. So basically, this looks at the governance aspect of your business. And GRI 3 provides the disclosures and guidance about the organization's material topics. So when we say materiality is one of the basic principles of GRI. So when we say materiality, how do you determine what sustainability topics you should report on? So thinking from that perspective, from that principle, it means, as a business, what is your impact? So to the economy, whether it's economical, environmental, or societal. Just a concrete example, if you are a beverage company, what is your impact? I mean, think about environmental. Top of mind is of course water, right? So you use water heavily in your business because you're a beverage company. So what is your impact when you use to the environment when you use water. Just an example. And then in terms of, we also have the sector standards. So we in the sector standards, as I mentioned earlier, we've released a few and coming up with a couple more in the next couple of years. And this is a set of, for each standards, again, we do the process. We identify a set of material topics which, based on the research and the consultation and the engagement, which topics are the most material to each sector. And so then we go to the topic standards. The topic standards specify what are those specific areas in terms of economy, environment, and social that you can report on. So for each topic, we have, I think now 30 plus topics. So for each of the topic, we also indicate there, it includes there the indicators and the guide by which you can report on each of the topic. Next. Okay, so what are the benefits of using the GRI standards? So as I mentioned earlier, over 100 countries are referencing GRI in their requirements for sustainability reporting. So this can, one benefit is there's already policy integration and referencing. So governments and market regulators can easily refer to the standards in their policy initiatives. And if you look at, some of the reportorial requirements by exchanges and regulators, those that don't directly require the use of GRI standards, they will always, more often than not, they will say, you're required to do sustainability reporting, but you should use internationally recognized standards such as the GRI standards, because we know that when you, companies, a lot of companies do international trade. So if you're using GRI standards, then it's easy to benchmark yourself against your peers, whether locally or internationally. And then it has a flexible and future-proof structure. So our standards are dynamic. So we when we know that there are new developments in the market for specific topics or standards, we make sure that these standards remain up to date and relevant. In fact, for those who have been knowledgeable about GRI for a long time, it has gone through several evolution from GRI to 2, 3, 4, and now the GRI standards. So even the GRI standards, we have revised it since GRI standards was launched in 2016, and since then we have gone through several revisions of certain topics like the universal standards to ensure that it is up to date and relevant. And then, of course, as I said, it also provides, if you're doing international trade, it also provides you a common global language, because one framework, if we provide a framework that can meet all reporting needs, from comprehensive reports to issue specific disclosures. And of course, we can proudly say that our standards are credible and robust. Going back to what I mentioned, that we ensure that there is multi-stakeholder contributions, and the root of it all is we take public interest at the heart of it. Next. Okay, so Luis mentioned earlier, a lot. He said that there's a lot of acronyms. So this is to make it more complicated for you guys. So there are more acronyms in the sustainability reporting landscape. But I think I'll attempt to just explain, to show a few, but make a distinction. What is the difference among these three? Because I think this is where most of the confusion lies for companies. So you have the reporting standards, the framework developers, and then the rankers and raters. So what are reporting standards? So the standards are the detailed requirements of what should be reported in each topic. So right now, you have GRI on the impact reporting, ISSB on the financial materiality reporting, and then FRAG, which this is in Europe, so more on financial reporting on sustainability. And then you have the US climate disclosures, but we know what's happening in the US, so this is probably on pause right now. So it It again, standards refers to the what, the detailed requirements on what should be reported. Then in the middle, you have the framework developers. So the framework developers are a set of principles and guidance for how information is structured. So you can say that framework is much broader and standards are more detailed. And what's the difference as well? So framework developers usually, these are not mandatory. So normally they would have for those initials that you have in there. So they would be open they would invite members there, and the members would be required to some sort of requirement. So if you want to be part of this group, then you have to abide by the principles based on this organization. In terms of reporting standards, they can be mandatory or voluntary. So like ISSB in some jurisdictions, particularly in Asia, regulators have already started mandating ISSB. GRI is a voluntary standard because and GRI has always been, that's the direction of GRI, because we serve more stakeholders, whereas IFRS, the ISSB standards is really focused on investors. Now, at the far right of your screen are the rankers and raters. So, you've probably heard about the alphabet soup in reporting, but I think most of the alphabet soup occurs here in the rankers and raters game. So basically, the information, the sustainability information that you have, that you report publicly, are used by the rankers and raters to rate the organization on how sustainable they are. Next. But when we talk about rank, so this is again to make more sense of that previous slide. So where does the rubber meet the road, right? So sustainability reporting, as I said, you can do impact reporting, which is GRI, and then financial reporting, which is I think it's starting this year for most jurisdictions, for a lot of jurisdictions that require ISSB. Okay, so that is the sustainability report, and based on the different standards that you use, you're supposed to report on the topics and indicators that are required by the standards. And now these standards, who are the users, right? So you would have different stakeholders, your customers, your supply chain. Another user of sustainability reports are the ESG ratings and ranking organization. But again, how they rate and rank you depends on which perspective of sustainability they are looking at. So it could be they're using double materiality, meaning they are looking at both your financial materiality and impact materiality, or they can also just be looking at your impact, or there are those that looks just your financial materiality. Okay, so just to give you a concrete example, if you look here, you have MSCI. So MSCI, I could be wrong, but from my understanding, they look at financial materiality. Why did I say that? I read this report of Bloomberg a couple of years back, like I think during the pandemic. So they highlighted as a case study the case of McDonald's. So McDonald's, if we talk about what is their most material impact, one would be GHG emission. Why? Because they sell burgers, and we know cows are one of the biggest emitters of methane. So during that time, when MSCI was rating McDonald's, they upgraded the rating of McDonald's. So people were asking, but they emit a lot of methane. So why were they upgraded? The reasoning of MSCI was that they said GHG doesn't really have, their emissions don't have a direct financial impact on McDonald's, right? So that would be a financial materiality, because financial materiality would look at the financial effects of sustainability issues. And from the perspective of MSCI, the methane emission has no direct impact on the financial bottom line of McDonald's. And then and what they did was also, the way to justify the upgrade was that they were doing well anyway in other aspects of sustainability, like recycling. So meaning they were recycling, and probably that reduces their costs as well with their recycling practices. So they said in the end it's offset, then they have an upgrade. So that's, I hope I've given some clarity what's the difference between financial materiality reporting and impact reporting, and somehow explain why is it important to do impact reporting first before you do financial materiality. And also just to give you an idea that not all ratings agencies are the same. So because I also get that question from companies, like why the same sustainability report I submit to 5 different ratings agencies, I get different ratings. That is the reason, because each ratings agency would have their own methodology. Next. Okay, so this is just to, again, visualize double materiality. So as I said, GRI is all about impact of an entity's activities on the world. And then financial materiality is impact of sustainability topics on the entity, particularly the financial impact of sustainability issues on the entity. So as I said, it's a responsible first step for companies to do impact reporting first before they do the financial materiality. Why? Because if you don't do your impact reporting, if you don't really understand what your impacts are to the world, it's easy to disregard. You can just easily say that, like the example of McDonald's, you can just say that, yeah, GHG report, even if we emit a lot of GHG, carbon or methane, it doesn't really impact me financially. So I don't need to address that, right? So that is the danger if you just if you disregard the impact materiality side. Next. Okay, so this is so I distinguished impact reporting from financial materiality reporting, and GRI standards is all about impact materiality, and IFRS is all about sustainability-related financial risks, sustainability-related financial risk and opportunities. So in terms of stakeholders, GRI serves a broader range of stakeholders, whereas IFRS sustainability disclosure standards focuses more on investors and capital markets. Next. Okay, so given I think most with the introduction of all these reporting standards, reporting requirement in terms of international standards and local regulations, it's safe to say, and it's justified, the confusion among reporters, existing reporters, and those that are now being required to report who have never been required before. Because if you're just coming into the game, suddenly you're confronted with all this alphabet soup of organizations. But for GRI being, I think we're among this all alphabets, GRI is the oldest. So we are working with everyone, taking consideration also that majority of reporters are already using GRI. So we think that it's also our responsibility to work with other organizations to ensure that there's a more streamlined global reporting system. I think I will stop there for now.
Thank you, Annette. That's impressive. The power of GRI, as we've been experiencing and witnessing over the years, it's amazing how it's grown and how important it is for all organizations that are looking into a wider impact beyond compliance, and some even in the compliance perspective, from depending on the country, they would be looking into requiring GRI as a standard. And happy to be part of your qualified training organization, one of the training organizations that we deliver those type of training. So I'm happy to discuss those with the audience or after we speak. I've been looking into the Q&A, which has been very, very exciting. And if you feel free to look into that too, and if you would like to answer any questions, please feel free. So the last part of the of today is to discuss about how do we build trust through sustainability reporting. So next slide, please. 4 main topics. We'll look into standards, best practices, and how a sustainability process, independent assurance in a sustainability process can help you Next slide, please. Why standards? That's let's say an interesting question. Some say on the following slide, please. Next slide. Some could look into as a peace of mind, which is the glass half full, and others may see it as a too complex exercise. But in essence, it is the standards are there to enhance the products and services that you deliver, improve safety, and meet best practices. So you get to become a prominent leader in your industry, being aligned with certain standards. And just an example, the ISO Net Zero guidelines that we designed together with ISO. It's a unified framework for companies to reach net zero. Thank you. Next slide. In terms of cycle, I'd like to draw your attention to the left side of the slide, which is a cycle, an example of a standardization cycle. It's called Provisional Assurance Standards. That GRI, as I remembered, we discussed previously, is a standardization organization. So we design standards, and 60,000 of those standards have somewhat that followed that specific cycle, which embeds technical expertise, different stakeholders, diversity in the process, steering groups, committees. And so it's a very lengthy process. It can take from 12 months to 2 years until it reaches consensus. That's critical. There's no way out of that. So consensus is prominent. It's important. It has to happen. Otherwise, a reliable standard should not be launched. And they are scalable as we develop those provisional assurance standards, and they are scalable by working with other organizations such as ISO, International Standardization Organization, which we are one of the founding members of ISO, as a matter of fact. And we work together with them very closely, such as with the ISO 14068. That was an evolution of the past 2060 that we launched. So that is an example. Another example that I'd like to share with you is the new ISO 14060, which is the net zero aligned organization standard. That's in, let's say, 75% stage, which is just past draft. And through the international harmonized stages, you can see, if you link into that source, you will see how which stage it is. Thank you. Next slide, please. And which standards to choose? On the next slide, I'll ask you, please, Ewan, if you can just press the next button there, please. Depending on the type of standard, there would be a completeness around it, and you get what you align yourself with. Remember, we discussed previously about what's your intended use. So if your intended use is to go through carbon neutrality, if you choose carbon neutrality standard ISO 14068, you get subject matter expertise on emission reduction projects is required, scope 1, 2, and 3, value chain knowledge, project management, QA/QC, and so forth. SBTi, you probably have heard of that one before, which is science-based targets. Is not as comprehensive as the past 2060 ISO 14068, but it is embedded in a section of that standard, the ISO standard, but it's particularly focused on emission reduction targets. Next, please. Then you have another coverage, which is taken care by the ISO 14064 standard, which is the largest one that is being used around the world since the early 2000s until now, as the most important inventory-related, greenhouse gases inventory-related standards, along with GHG protocol, which is embedded in the ISO 14064. And that next one, please. After that, you have other cross-sectioned circular economy, like standards like circular economy, The ISSB, which is related to disclosures, they're not completely looking into the whole life cycle assessment a circular economy would look into. And other standards that the ISO Net Zero guidelines we previously mentioned before. And another one, which is the ASEAN Net Zero pathway, embeds most all of those areas. It doesn't look into the finance side of things such as the ISB does. As you can see, it's not covering that ISSB part. And you have the GRI, which is comprehensive as is from an impact organization, but also doesn't look into materiality and financial specifics. Next slide, please. So how do we work in a sustainability reporting process? How do we verify them? Next slide, please. We look into the principles that, to start with. Remember in the previous presentation, we did look into mention those principles that would be common across the board with most of the sustainability standards. And those principles are listed there. Is everything important? Are all emission sources from a GHG perspective, for instance, are all emission sources that you should be considering being reported? Are they complete? Are all your equity participation in certain industries? Are all the shops that you have 2 shops or 1 shop from an operational control perspective, are they being considered? Are they consistent? Is data being consistent over time? Is data accurate, transparent? That's what we look from an auditing perspective to start with, depending on the standard. And most of the standards look into those principles there. Next slide, please. And the process would be, I'll just ask you to please continue pressing as we go. There's 10 typical steps of a verification process. I won't go through all of them today, but I'm happy to discuss those in more details. But I'd like to highlight that 3 of those steps are interacted with clients on a day-to-day basis. So the risk that we see upon the data that we deliver, the data that we receive, excuse me, we look into the risks of those informations from a communication standpoint, accuracy, and also other activity-related operation, for instance. And the execution of the verification, which is the on-site assessment, and it concludes to a draft report that we send to our clients, and then it's independently reviewed, internally independently reviewed, until it's issued a verification opinion at the end. Next, please. So yes, what is the benefit of independent opinion, independent validation and verification? We did discuss that in previously slides of the presentation and GRI's perspective too. And I guess one of the main things is when we are governing or starting our initial steps on sustainability, we need to have our data and our strategies designed that should be validated. So how can we convince the board, or how can we convince my boss from a pizza shop that which is not least important, but how do I convince them that we are on the right track, that they are investing in the right resources? So if you hire an independent validation organization, they will look into the construction of your work and will validate that from a constructive perspective. The trust that you get, you increase the trust among all your stakeholders on a day-to-day basis. Your clients will see, your supply chain will see, they will see that you are leading the best practices, as it happened with the ISO 14001 series that were, designed a couple of decades ago, a few decades ago, as a matter of fact. Now it's a norm, so the early adopters of that kind of standard today will be the leaders of the future. And that would happen, that would also carry the whole value chain and the whole interactions and stakeholders that they are working with along the process to reach that prominence. And it'll gain a competitive advantage, no doubt about that. Scale, it's important. You will be having a window of opportunities with international markets, and even with internal stakeholders. Governments already require ISO 9000, for instance, etc. And investment decisions are going to be taken with a more level of accuracy, with confidence and comfort, so that capital investments, or even let's say not that intense resources investments, can be done with a greater level of certainty. Greenwashing, that's crucial for your reputation. It will avoid greenwashing. You'll be sleeping well, and ensuring that your processes are in alignment with brand that would be verifying your activities. And last but not least, compliance. If you have a third-party validation, and that's been happening along the years, and in Europe directives, and Australia, in Malaysia, and most all ASEAN countries are merging towards a requirement of validation and verification on their sustainability reporting. So then at the end, on the next slide, there are numerous standards, there are numerous information out there, but and I'd like to leave this example that is a consensus description collected from the PAS 0 2022, which is the standards of how to design standards. And consensus is key. It's fundamental, and that if there is no consensus in any standardization process, I would invite you to move away from it. And the main thing is that it reconciles any conflicting arguments, and the more arguments that exist, and the more rich the process is, and the more prosperity it delivers. And also, consensus it's not unanimity. So that's what we believe that is a key for our processes in everything that we do from a BSI perspective. So that yes, that's it from my side. I'm very pleased to be part of this presentation today. I'll give it back to Siu Yin.
Thank you very much, Louise and Dr. Allinnette, for your very insightful sharing. It's Q&A time. I know we are slightly over time, but let's take 2 questions. And what we'll do with the rest of the questions, we will respond to them via a FAQ document that will be shared with all attendees of the webinar. So maybe a question to Dr. Ali. Since GRI started back in 1997, what has changed? And how do you see sustainability reporting, including GRI and the likes, such as IFRS S1 and S2, help to address climate change and social challenges or governance issues? Okay. Dr. Ali, over to you.
Thank you, Siu Yin. That's a very multi-layered question.
Yes.
So, and it traces back to first. Siu Yin, let me know if I managed to answer all of them. So let's start first. What has changed? Well, a lot. 30 years has happened. So one important thing is, because when we are a voluntary organization, right? So while we have managed to get global adoption of GRI, it's still voluntary, and for the longest time, those, unless it is required by the exchanges or regulators, companies do it voluntarily. So some companies would do it as something as nice to have, but not a must, something that they must do. But now globally, with all this, acronyms coming up, there's more focus on sustainability and reporting. It's now a must have for companies. It's no longer a choice. It basically is related to the company's existence, right? Because it also speaks. It is a language that speaks to not just to your regulator, but also to your different stakeholders. What's the next one? How to address climate change and social challenges. Okay. Coming from a standard setter, this might be an incongruous answer. Sustainability reporting will not solve the world's problem. It is concrete actions. reporting is a tool by which you can refer to, like, what it's like, okay, there was a question, how do I start? Like, what are the things that I can implement in my organization? And if you look at the standards, particularly, as I said, GRI is a good first step. It's basically the kindergarten of all sustainability reporting. Anything you need to know about sustainability reporting, you start with GRI, right? So then you look at, what is the nature of your organization, what is your impact to the economy, environment, and society, and then from there on, if your impact, as I said, is on water, is on sourcing materials, then you look at, if it's negative impact, then you start thinking, how can I improve my negative impact? So once you integrate, once you adopt concrete practices in your organization, the reporting will come naturally. Did I answer all?
Yes, Dr. Ali, thank you very much. And that's a question I'll probably point it to Louise. What are the assured metrics, for example, carbon emission or social impact in sustainability reporting?
What are the metrics?
Yes. What are the assured metrics?
The assurance metrics. Well, when we look into, for instance, the data that arrives to the auditor, they would look into consistency of data. For instance, if there's an Excel sheet that we receive, we'll look into the calculations of those data, look into the emission sources that would be making the calculations from a global warming potential perspective, so that we would ensure that there is a consistent and reliable method for calculating emissions. That's an example of an Excel sheet. And also from a qualitative perspective too, we look into the claims that are out there. For instance, if a company has been inadvertently saying that they are sustainable, which is a very, very tough claim to say, but is it sustainable against what? So always we advise organizations that you should look into sustainable against something, or I am reducing my emissions against that standard, against that best practice. So things can be measurable. And then we look into from those qualitative and quantitative perspectives. Not just those, but also look into the emission sources, go on site, look into the metering systems from a gas meter, for instance, or a flare. We have to look into those data and compare the data over time. So there are numerous other technical activities that we do, and BSI knows how to do, because we have auditors that are from the field and they know how things happen there. So we engage, and our customers that normally engage with us, they are serious on their claims, and so that's a very fruitful process.
Thank you, Louise, for your answer. I think we are really at the top of the hour. In fact, we are going over time. So like I mentioned earlier, we will respond to all other questions via a FAQ document that we'll be sharing with all attendees after the webinar. So before you leave, I will appreciate if you just take 1 minute to give us your feedback about the webinar. And at the same time, I'd like to thank Dr. Allinette and Louise for your time today. Thank you very much. And thank you to all attendees for sharing your time with us.